Thank you so much. It's great to be with everyone. I'm longing for the day that we can soon do these in person, but it's good to be able to do it virtually, although I just miss being able to talk to folks and hear what's on your mind. So I want to talk this afternoon about my view of what's going on in Washington. And obviously, I'm not happy about the things that are going on in Washington. I'm a Trump guy. So I feel like a lot of the achievements that we made during the Trump era are at risk with a lot of what Biden is doing. It's almost as if Biden wants to erase the Trump years. And I think as a summary, I would say, I know that people watching this production have very different opinions about Donald Trump. Some people may like him. Some people may intensely dislike him. I know especially women do not like Donald Trump. They don't like his antics. They don't like the things that he says and his behavior. But what I find really interesting is that week after week after week that Biden has been president, people will come up to me and say, I didn't like Donald Trump very much. I didn't like the way he acted and so on, but I like his policies. And I think that's a pretty common position now, that people say, well, what Trump was doing for the economy was great if he could have only behaved himself. And look, I am friends with Donald Trump. I had lunch with him about 10 days ago at Mar-a-Lago. So I have, a real kinship with him. But I realize he's a very flawed individual. But I think that what's interesting is that the policies are looking pretty good now compared to what's going on in Washington. So I want to talk a little bit about this big $4 trillion spending bill that is coming down the pike. I was just on Fox Business News. I was a little late for this production because I just got off the air. But I prepared some charts to show you kind of what Biden is proposing. And incidentally, I forgot to mention, if you don't get our prosperity hotline, this is something that we put out every morning. It covers 5 or 6 items every morning, very brief. You can read it in less than 10 minutes, maybe 5 minutes. And sometimes it's just a New York Times headline, New York Post headline, or just a short item. Sometimes it's just a graph or chart. Many of the graphs and charts I'm going to show you in a minute are presented in the hotline every day. And so if you'd like to get that, it's free. All you have to do is just you can do 2 things. Go to the Committee to Unleash Prosperity website. That's Committee to Unleash Prosperity. Or you could just email me and I will send you, first of all, I'll send you the whole presentation, because I'm only going to get through about 7 or 8 of these graphs, but I have about 40 of them. So if you're into this kind of thing, you might find it interesting and useful. So I'm happy to send this PowerPoint to anyone who wants it. So to reach me, email me at smoore, SMOORE at heritage, I'm sorry, SMOORE at freedomworks, 2 words, freedomworks.org. So that's SMOORE at freedomworks.org. And I will sign you up for the hotline, and I will send you this PowerPoint. By the way, I'm going to talk for maybe 15 minutes, and then I want to hear whatever I learn a lot from what questions and comments and criticisms you have. So I'm really looking forward to hearing your feedback on all of this. So I'll start by saying I think that this $4 trillion spending bill, we don't know the exact price tag. It keeps changing every week. Right now, the Congressional Budget Office is doing an official score of that, and they say they probably will have some preliminary numbers on Friday. Congress, Nancy Pelosi said today or yesterday that she wants to have a vote on Friday on this bill, which I think is incredibly irresponsible. Nobody's read the bill. B, nobody knows what's in the bill, and C, nobody knows what it costs. So that's hardly a way to make the sausage in Washington. And so, but I have looked through a lot of the bill. I don't know what's in all of the provisions of the bill. They're changing all the time. But I thought I'd just give you a macro impact on this bill. So if you look on your screen, you can see there's a chart that looks at what happens to government spending as a share of our gross domestic output, because that's a good measure of how big our federal government is relative to private sector production. And you can see today in America, 2020 was a strange year because of COVID. Government sort of took over the economy for 9 months. But now we're getting back to normal. And so during kind of normal times in recent years, government spending is somewhere around 30 to 35% of GDP. This is the federal government. And you can see that over the decades to come, those numbers rise and rise and rise if we pass the Biden plan, because what the Biden plan does is it plants a lot of these little mustard seeds of entitlements into the budget. And then what happens, they start out with a very small budget, but we learned from Medicare, Medicaid, Obamacare, Social Security, the programs get bigger and bigger and bigger and more expensive all the time. And so what's the point of this chart is to show you that in the next 30 years, if we stay on this path we're on, and then on top of that, we pass this Biden budget, we're talking about by the year 2049, which isn't really that far off, the federal government takes over half of our GDP. That's a very unhappy outcome for anyone. That would mean we're more socialist and more government control than private sector. That would mean the government is bigger than all the output of every private business and private work in America. So obviously we don't want that to happen. The debt would go way, way up. None of this is really paid for. And so you can see here that the dark green line is showing our debt as a share of GDP over the last 100 years. And you can see it spiked at the end of World War II, and then we started paying down the debt. And you can see since the 80s or so, the debt has been climbing pretty consistently through Republican and Democratic administrations. Although under Clinton, we actually reduced the debt. But what's interesting is to see that the projections, because of the strain of the retirement of the baby boomers, that these programs are going to be bigger and bigger and bigger over time. And then if you look at the sort of pea green number or chart, this top line, you can see that our debt would go to 300% of our GDP. That's something that would make America look like Zimbabwe and Venezuela and Argentina. We can't allow that to happen. We have to get the debt spending under control, and that's a big problem. Okay. This is just another variation of that chart I just showed you. But really what I find interesting about this, because I am an economic historian, is if you go back to the founding of our country, we've had 5 or 6 or 7 or 8 major events that have shaped our country: the Revolutionary War, the Civil War, World War I, the Great Depression, World War II, the Cold War, and now, of course, COVID. And what's so interesting, and also I would add to that the big bank meltdown and the real estate meltdown that happened in 2008 and 2009. And what's really interesting about this chart is you can see that when we have the crisis, we increase government spending to deal with either the war or the pandemic or the depression. And then when the crisis is over, normally government spending comes way down. So you can see that's what happened after the Revolutionary War, the Cold War, the Civil War, World War I, the Great Depression, World War II. Even after the Cold War, once we had defeated the Soviet Union, the evil empire, the debt as a share of GDP started to come down. And this is the first time that we have a president who is proposing a massive increase in government spending, even though the crisis, COVID, is largely over. It's not completely over, and might be some winter problems with COVID, but the crisis of the pandemic has passed. We're getting back to usual, and yet Biden wants to massively increase government spending and debt. And the main reason I mentioned that, there's no economic rationale whatsoever behind this. This is not based on growing the economy, creating more jobs. It's all basically redistribution. It is a massive multi-trillion-dollar redistribution of income. And people can make up their own judgment about whether they think we should be massively redistributing income, but that doesn't make a country wealthier. It may make the income more equal, but when you equalize income, overall output comes down. So there's a very much of a trade-off there. Okay. I just thought I'd put the spending that's going in place this year in historical context, and you can see when you compare, what we're doing now. These are all in real dollars, but this is more money than we spent to finance the New Deal, the World War I, the Korean War, the Vietnam War, all of these things, World War II. So this is a gigantic power grab by government. And as someone who's a kind of libertarian leaning person who wants government to be, as George Washington said, government which governs best governs least. I'm a little concerned about this, and I think anybody who loves liberty and freedom and free enterprise should be concerned about the massive amount of power that we are assigning to government. This next chart just shows what happened last year. I just find this to be kind of interesting. I mean, last year was an aberration because of COVID. We shut down a lot of businesses, but what's really interesting is that for the first time in American history during COVID, the government became the biggest industry in the United States. So it surpassed the banking industry, the finance industry, all manufacturing, housing, healthcare, financial services. They were dwarfed relative to the size of the federal government. And I'm concerned about that. I think, when the government gets out of control like that, it does take away your freedoms and your liberties. I'm going to skip that. I'm going to skip that because I want to skip ahead. This is one I think is kind of interesting. How big is this spending spree that we're talking about right now? And this is just what Biden proposed in his first 100 days in office. Now he's been in office about more than 200 days, but you can see that, remember, when Obama came into office, that was during the crisis of 2008, 2009, during the housing meltdown and the financial crisis. He proposed a little under $1 trillion in fiscal stimulus spending. And at the time, we thought, boy, that's a hell of a lot of money to be spending, $1 trillion. It didn't work out so well. The studies now show that the money really didn't have an impact one way or the other. Government spending is not a really great way to stimulate an economy. I think you all know that. But what's so interesting about this is that you compare Obama with what Biden's proposed, and you're talking about 1 trillion versus 6 trillion or so. And that just gives you a sense of how gigantic how far to the left the Democrats have moved, where they're now proposing a $6 trillion spending binge. As you know, the 1.9 trillion, that was the blue state bailout bill that bailed out, states like, California, New York, Illinois, New Jersey, et cetera. And then the second one is the American Job Act, which has not, passed yet. And then you've got this American Family Plan. That's sort of the infrastructure bill, but that's a lot of money. And that's unprecedented in American history that we would spend those kinds of dollars. And, Biden would say it's transformative. It is transformative. I don't know if we want transformation of America. If you do, then you probably like this agenda. I thought these couple charts are kind of interesting. This just shows the path of federal revenues and the path of federal spending as a share of our GDP over the last 50 years. And you can see from this that revenues, which is the yellow line, they've been pretty constant over time. They've been, they usually go between 17 and 20% of GDP, with a median of around 18 to 19% of GDP. And if you can look at this chart, you can see in the future, if we do nothing with our tax code, the revenues will continue to climb, probably because we have a progressive tax code. So as the economy grows bigger, more and more people are in higher income brackets and so on. So revenues are not supposed to shrink. They're supposed to continue to grow as a share of our economy, not by a lot, but by somewhat. Then if you look at the red line, the bottom red line is the projection if we do nothing. And you can see that, we have a lot of increase in government spending, even if we do nothing with the Biden plan. And then the top line is what happens if we pass these Biden plans. And you can see this is in my opinion, a catastrophic result. Well, will it happen? I kind of doubt it. I think that I think they may end up passing a bill, but I don't think they're going to pass the gargantuan bill that Biden and Pelosi and Schumer have proposed. Going to move on here. I want to move to the tax side of the equation. I want to find that. I think this is an interesting one too. It shows that defense spending has actually come down really dramatically as a share of our budget. It used to be like when John F. Kennedy was president, half of our budget was the national defense. And now today, defense is about 10% of our budget. So I do think we could save money cutting from the defense budget. I think we're spending a lot of money, $800 billion or so a year in defense, but I don't think the problem is the defense budget. You could get some savings out of that, and we should, but when you go from 50% of the budget to 10% of the budget, national security, that means that we've gone from 50% social programs to 90% social programs right now in our budget. And I'm not so sure that's a healthy thing. And one way to look at that is, here is the defense budget is the yellow line, and the non-defense budget is the red one. And that's where all the massive increase in government spending has been. I want to make a couple of more points, and then do we get results from government? That's just a good overall macro thing to think about. When we spend more and more money, does it produce results? Because one of the sicknesses in Washington is the idea that we just spend and it doesn't matter what the programs work. We kind of measure our how much we care about a problem by how much the government spends. Well, that's not what a private business does. You measure, if you're an investor or a business owner, you measure the results. Are you getting bang for your buck? And I just thought, because we're spending a lot of money on education, and the Biden would almost double the U.S. Department of Education budget. Does that make sense? Well, look at the red line. That's the achievement that children have been making over the last 40 years. You can see it's been, it was a rapid decline in the early 70s, and then it's been a drifting downward ever since. And then the green lines show the massive increase in government spending, per pupil. So is more spending the solution? I mean, I'll just ask you all that. To me, no. We need more accountability. We need more choice. We need to get rid of bad teachers and reward good teachers. We need to make sure that the curriculum is rigorous and teaching real history and real science and real math, and not getting into all this critical race theory and things like that are really not preparing our kids for being well-educated adults. I want to just show you a couple more, because I'm constrained in time here, but I wanted to show you. Here's what Biden is talking about on taxes. And this should be concerning to people. I am a supply sider. I think raising tax rates is always a bad idea. I believe that, as Steve Forbes would say, you want a broad tax base and a low tax rates. So the tax system raises the revenue that the government needs for the vital programs, but doesn't cause distortions in the economy, and it doesn't create disincentives to work and invest. Well, that's what we've been doing for the last 30 or 40 years. I'm proud to have worked for Ronald Reagan and Donald Trump. Both of them, I was a 26-year-old pimply-faced kid back in the 80s when I worked for Reagan. But then, I remember those tax cuts. We brought the highest tax rate down from 70 to 28%. But we also cleared out a lot of the junk in the tax system. And unfortunately, Biden's doing sort of the opposite. So you can see how much these tax rates would go up. Now, I'm going to give you some best guesses about what's going to happen at the end of the day. So on the corporate tax, we're at 21% right now. That's about the international average. I think they're going to leave the corporate tax rate at 21%, but they're going to have a 15% minimum tax. And I can live with that. I can live with a 15% minimum tax. I know some of you may not like that idea. I'm kind of agnostic on it. The small business tax, we got the rate down to about 28, 29% for successful small businesses. Remember, small businesses pay personal income tax rates. Biden wants to take that up to 42%. Actually, his latest proposal would take it up to 50%. This is dated. This is about a month old, but they're adding all these new surtaxes. I don't think they're going to be able to get the tax rate up that high. I just don't think so. I think they might get it back to where it was under Obama, which would take it back up to, about 40%. Would that be the end of the world? No, it would be negative for the economy. It wouldn't. But if you go above 50%, I think that's really, really problematic. I think you see all sorts of tax evasion. You see people moving their money offshore. It just has extraordinarily negative effects to raise your tax rates up to 50%. If you read the Wall Street Journal today, they showed the United States under the Biden plan would have the highest tax rates out of many of our businesses in the world. That's not where the United States wants to be. They had originally Biden wanted to raise the payroll tax, but that has been dropped. So you can ignore that one. And then capital gains, which is a big one for all of you. We're now at 24%. I think they might get the rate up to 28%. And that's not the end of the world. But I don't think we're going up to, above 30% on capital gains. I don't think that's going to happen. And then the death tax on stocks, they were proposing a big tax on unrealized capital gains, but I got to tell you, I don't think that's going to happen. I think that's going to drop out. So they're really trying to find ways to raise revenues. One of the most crazy ideas for raising revenues, they want to hire 80,000 new IRS agents. 80,000. That's like, a football stadium, a pro football stadium full of IRS agents to harass people. And I think that's a horrible idea. I think the way you get tax revenues up is grow the economy, make the tax system really simple. And we're kind of doing the opposite with this bill. And then I think I'll maybe just end on this, and then I want to take questions from you all. Lower tax rates really do have the virtue of being associated with better tax compliance. People pay more when they view the system as fair and efficient and transparent. And so you can see, like under Reagan, the red line is the highest tax rate. It was 70% when he came in. And as I mentioned, we took it down to 28%. And then, the share of taxes paid by the rich continued to rise, even, as the rate stayed 40% or below. And you can see at the very tail end of this chart, when you look at the red line, which is the tax rate, and the green line, which is that's actually the share of taxes paid by the top 1%, you can see that we actually achieved more tax revenues collected from the rich, even after the Trump tax cut. So the idea this was some kind of big tax giveaway for the rich, I think was just mistaken. I'm going to say one thing about inflation. I think that the worst thing we can do right now, if we want to control inflation and get it back to, the 1 to 2 to 3% range, not the 6 to 7% range, is we just cannot pass this bill. If you pass a massive spending bill that's going to be paid for partly with debt, which would be basically printing more money, and the tax cut taxes producers, so you get a reduction in production, you get an increase in demand. Boy, that smells like inflation to me. And I think that Joe Manchin, the Democrat from West Virginia, is right. When you've got inflation that's snowballing as it is right now, it doesn't look transitory, and it doesn't look like making massive increase in government spending are a wise thing to do right now. I don't think it's ever a wise thing to do, but I think especially not now. And I think the Fed is behind the curve. They've got to get rates up a little bit, and they have to stop with these asset purchases. And why in the world, in the hottest real estate market practically in the history of this country, is the Fed continuing to put branches on the fire with buying up these mortgage-backed securities? I don't understand the logic of that. Did they not learn any of the lessons for what happened in 2005, 6, 7, and 8 when we build up this big housing bubble? I worry that the Fed may be doing that again with its low interest rate policies and its purchases of mortgage-backed securities each month. I think it should stop right now. In fact, I think it should be selling mortgage-backed securities, not buying them. Okay, folks, that is a quick summary of what's going on in Washington today. And why don't I see what some of the questions and comments are?
Thank you so much for that, Steve. That was so informative. We got so many questions ready for you, starting with, do you think Biden will be a one-term president?
I do. I think the question is, will he make it through this whole term? By the way, I haven't seen Joe Biden. I mean, I've met Joe Biden a couple of times in my life. So I don't know what his, condition is, how on top of things. He seems to me to fade. Sometimes he looks very, on top of his game, and other times, he seems to fade. And look, he's closing on 80 years old. I'm only 61, and that happens to me. So I'm not disparaging him. I just think it would be very unlikely that he would run for a second term. I would say the odds are 20%. But the big issue is if he doesn't run, or maybe doesn't make it through this first term, they've got a Kamala Harris problem, the Democrats. And Kamala Harris her approval ratings are just awful. I mean, the American public just does not like Kamala Harris. And when you fall as much as she has, she's just damaged goods. And I wouldn't be surprised if the Democratic Party were to tell Kamala, you know what, why don't you become Secretary of State, or why don't you become, why don't you represent us at the United Nations or something like that? And they get her out of the way, and then they could put someone in as vice president who is more acceptable to the American people. And for me as a Republican, that would be bad news. That would be the smart thing for the Democrats to do. But we will see as that proceeds. But I would say the odds are only about 1 in 5 that he would run for a second term.
Thank you so much for that. Next question is, what is your best guess in regards to IRS intervention?
I'm sorry, in terms of IRS intervention?
Yep.
I'm not exactly sure what's meant by that. If what is meant by that is, will the IRS be playing a bigger role in our lives after this, if this bill is passed? The answer is absolutely yes. Do I think they're going to get 65 to 80,000 new agents? I pray no. I think this is one of the most obnoxious features of a Biden proposal that, I went through a tax lien. Some of you may know that I was nominated by Trump to be on the Federal Reserve Board. And one of the reasons I didn't make it through the process is that I had a tax lien where the IRS said that I owed them $60,000. And you can't be nominated. You can't get through Senate confirmation if you have a tax lien. And I told the senators, I said, look, we've done the math. We've done the accounting. We think actually the IRS owes us money. We don't owe them. We think the IRS owes, we think we overpaid our taxes. Well, sure enough, about 6 months after my nomination had been, blew up, we get a letter from the IRS said, whoopsie daisy, we did make a mistake. You did overpay your taxes. We owe you money. So it's a very abusive process. And, I had to spend so many thousands and tens of thousands of dollars to fight the IRS. The idea of hiring all these new, Butinskis is a really bad idea. And I'm surprised the left has embraced it so much. I mean, whatever happened to the left's concern about civil liberties for Americans? And the IRS is an extremely abusive agency. And you are truly, anyone who's gone through an audit, a thorough audit, knows that you are truly guilty until you can prove yourself innocent.
Thank you so much for that. I think that just helped out a lot of people watching. So next question is, what are your thoughts on inflation? Do you think it'll continue through 2022 and beyond?
Yeah, I do. I think that I don't think we're going to see hyperinflation, but I do think that the Fed has had the story wrong on inflation. Look, what happened in 2020 was really interesting. I mean, the Fed really screwed Trump because the Fed allowed prices to just plummet during so we had a severe deflation in 2020. That was the year of the pandemic. And you saw commodity prices just tumble. And I like to look at commodity prices as sort of the true measure of inflation. We saw like a 50% reduction in commodity prices. That's a huge, huge deflation. So some of the inflation we're seeing right now is just to get back to a normalcy. But I think all of the spending that's going on and the continuation of the zero interest rate policy by the Fed is behind the curve. And I think that we're going to see inflation, in the 4 to 7 to 8% range, not the 1 to 2 to 3% range. I mean, if you look over a chart of inflation over the last 50 years, the really interesting thing is, obviously we had really high inflation in the 70s under Nixon, Ford, and Carter. And then Reagan came in and we had the supply side revolution where we massively increased output, but we also pulled back on the money supply. And from that period, for the last 40 years, we've lived in an incredibly benign environment on inflation, with inflation being, it's shot up a few times, but for the most part, we've had inflation in that 2 to 3 to 4% range. And so I hope we get back to that. I'd like to see prices rising at about a 2% inflation rate to account for the increase in growth. Keep an eye on this, what's called the CRB index, the commodities index. I think it's the best forward-looking indicator of where prices are headed. And if you look at the CRB index, I wish I had my chart with me, but it goes way, 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 way down in 2020. And then almost from the moment of the election of Biden, it just goes straight up, and they've overshot now, and we're way, way up here. We should be down here. So I think the Fed is going to have to take some money out of the economy. And I think that the Biden administration has to stop this massive spend, tax, and borrow cycle.